Hello traders and welcome. In today's video I will share with you all the trades that I take this week from Monday 21st of April to Friday 25th of April, starting with the first trade in Monday from AUDUSD on the 4-hour time frame. This is Monday. From this bar, 8 o'clock, we have uptrend from EMA 20 and 50, clean 4-hour bar. In that case, I use the sell side liquidity, 4-hour sell side liquidity. Now let's jump to the 5-minute time frame to see the trade. Where is Monday? Right here. This is the sell side liquidity from the 4-hour bar. Here, price grab this liquidity with bearish bar, then the bullish bar with the lower wick. We have reversal structure. In that case, stop was around here, around 5 points. And risk reward ratio 1 to 3. You can see that this trade was in profit. That was the first one. The second one was from EURUSD. Let me show you again 4-hour time frame. Where is Monday? Right here again, 8 o'clock bar, this one here. For our sell side liquidity. This time the trade is from the 15-minute time frame, right here. Again, a long position. Stop loss from 20 pips. Risk reward ratio 1 to 3. But this one you can see that is a losing trade. That's all the trades from Monday. In Tuesday, I take many trades, actually 6, starting with US oil. This is Tuesday. Let's jump to the 1-hour time frame. This bar here at 7 o'clock. I use 1-hour time frame only for oil trades. Okay, so we have sell side liquidity from 7 o'clock bar. Let's jump to the 15-minute time frame to see where the trade is. Right here. Again, bearish bar. Hit this liquidity, then the bullish bar with the lower wick. Stop loss again under the wick. 20 points. 1 to 3. Perfect trade, as you can see. We have profit here. Next trade was from UK oil, similar like US oil, again from the 7 o'clock bar. You see that we have a trend from the EMAs, clean 1 hour bar, sell side liquidity. The structure is the same as this one from US oil. You can see the bearish bar, the bullish bar, the reversal structure. Again, stop loss from 20 pips and risk reward ratio 1 to 3. Another trade in profit from Tuesday. Okay, the third trade from Tuesday is from Euro USD. Here I'm looking at the 4-hour time frame. Tuesday, this bar here, bullish trend, bullish 4-hour bar. Let's draw the sell side liquidity and move to the 15-minute time frame to see where the trade is. Right here, these two big bars which grab the liquidity, the bearish bar, then the bullish bar. Stop loss under the bar around 30 pips. Again, looking for risk reward ratio 1 to 3, but price goes against me for second time this week on the Euro USD, and I take a loss here. Okay, the next trade from Tuesday is again from US oil. 1 hour time frame. Let's see where it is. Here, this one. For this one, I draw the liquidity, sell side liquidity from 10 o'clock bar. This one here. Again, uptrend, clean, bullish bar in the trend. 1 hour sell side liquidity, and the trade was on the 15-minute time frame. Right here. Let me show you. Liquidity grab from the bearish bar, bullish bar with lower wick. Stop loss from 30 points here because I want the stop to be a little bit under the wick, not right here. So in that case 30 points is okay. You can see how the price goes against us for a little bit, and then in the next minutes and hours price reach our target from 3 reward. Okay, the next two trades are from gold, again from Tuesday. This is Tuesday. For these two trades, I used the sell side liquidity from 1 o'clock 4-hour bar and 5 o'clock 4-hour bar. Let's move to the 30-minute time frame for the first gold trade right here. you can see that we have the bearish bar, then the bullish bar, stop loss under the wick, again risk reward ratio 1 to 3, but you can see how the price didn't go in my direction, so I take a loss. And the second trade is from the 5-minute time frame. Right here, again, liquidity grab, reversal structure, stop loss under the structure, and after a few hours I take another loss from gold. So in Tuesday, 2 losses from gold, 1 was from EURUSD, but 3 winners from US and UK oil. Then in Wednesday, I didn't take any trades, and in Thursday, 24th of April, I take the last trade for this week in from US oil. Let me show you. Here for US oil, I use daily sell side and buy side liquidity and the Fibonacci retracement. In that case, the trade is based on the Fibonacci retracement from Wednesday. Daily Fibonacci from Wednesday. This is Wednesday. Bearish Fibonacci retracement. Then the trade was on 1 hour in Thursday. Here at 15 o'clock. Price hit the 50% level zone with the bullish bar, then the bearish bar. Short position from here, 50 points was okay for me. When I take trades from daily levels, I use risk reward ratio 1 to 4. Again, this is only for oil trades. 1 to 4 is right here. But what happened here? Price was very close to my stop loss, as you can see. Then in Friday goes in my direction, reaching to our in profit. In that moment, I move the stop loss to break even, and then you see how the price reach this break-even point for me, and I exit from this trade with break-even, no loss, no win. So that was my trading week. In summary, what we have 1, 2, 3, 4 trades in profit with plus 3R, and 1, 2, 3, 4 trades in loss and 1 trade in break-even. I will describe all of the trades in the description of this video. Okay, now let's jump to the ETF market, starting with VUSA ETF, Vanguard S&P 500. This strategy includes 4 stochastics. You can see I am waiting price to reach and break this oversold zone from 10 on the 4-hour and on the daily time frames. So for from S&P 500 last week, you can see that the price was above this oversold zones on the 4-hour and on the daily too. FTSE overall, again, like S&P 500, price is above the oversold zone, daily time frame too. Japan ETF, and here the same. You can see strong uptrend at the moment after this very strong and deep downtrend. Swiss ETF, same story, and here from the 4-hour and from the daily. iShares, this is Nasdaq information techno sector. Again, nothing interesting from this week. And India ETF, again nothing. Few weeks ago, let me show you here. In March, I invested some money in this ETF around here. This is a good example for my strategy. All 4 stochastics under the oversold zone, change in the direction, uptrend at the same time. This was the place where I invest some money. Okay, that's it from ETFs. Crypto market, I'm looking at Bitcoin and Ethereum. From Bitcoin, no signs for oversold at the moment. And Ethereum, nothing from the 4-hour. On the daily, you can see that 3 of the stochastics was in the oversold zone, 1, 2, 3, but this one here wasn't, so I didn't take this as a buy signal for now. And now let's see the stock market, starting with Apple, of course. Apple, 4-hour nothing, daily still nothing. Johnson & Johnson, nothing interesting, and here from the last week. MasterCard, no oversold signals. Coca-Cola, the next stock, nothing, and here. Visa, pretty similar like MasterCard. Procter & Gamble, nothing, and here. PepsiCo, on the 4-hour, we have a downtrend. Price is close to these two oversold zones. Maybe next week we will have signs for buys here on the daily and on the 4-hour. Next stock is Home Depot. In Home Depot I invested a few weeks ago here from March. Again, all stochastics oversold, changing the trend at the same time right here, and you can see that the price at the moment is at these levels, so still it's a good time to invest in this stock. Okay, the next is Walmart. Nothing from Walmart. Unilever, this is a UK stock. No signs for oversold. Reckitt Benckiser, again UK stock. Nothing, but we have the downtrend. You can see price is close to the oversold zones. We will see the next week what will happen. Microsoft, nothing, and from Microsoft. And the last stock is Google. You can see that Google was very close. Many times stochastics was in the oversold condition, but never all of them at the same time. So still waiting for signals and here. So that's it, guys. This is my trading analysis from the last week. Thanks for watching and good luck. Bye bye.